Good morning. I'm Patrick Wakeman, and this is your Monday mortgage market update. So if you're buying, remortgaging, or trying to work out if this year is going to be the year when you want to make that move, we've got mortgage rates stabilising, affordability starting to improve, and of course we've also got the new Warm Home Scheme entering the conversation. So let's get into it, shall we? But first, let's start with a little bit of on this day in financial history. So it's literally on this day in 1946 that the Bank of England was nationalised, taking it from private to public ownership, and of course making it the institution that we know today. And that really matters because these days mortgage rates actually respond to things like inflation data, market expectations, and affordability, not just political headlines. And that's exactly why in this kind of market, planning beats panic. So let's get into those mortgage rates. And at the moment, they're relatively stable. But lenders are competing hard. And it's particularly for remortgage business. Lenders are really trying to retain the clients they've got. And generally speaking, we're seeing quiet improvements rather than dramatic drops. But pricing is definitely sharper than it was even a few weeks ago. And this is especially the case if you've got decent equity and a clean credit profile. And behind the scenes, SONIA swap rates, forward rate expectations are a lot calmer. And this is what's giving lenders confidence around those funding costs, which feeds through to more competitive pricing. So no fireworks, but conditions are improving. And now over to house prices. We've just had a fresh update from the Nationwide. The latest house price index shows house prices up 0.3% in January, and affordability is continuing to improve, so that's a really important signal. It suggests we're not in a runaway market, but it's one where confidence is gradually returning as monthly payments become more manageable. Think stability and realism, not boom and bust. And one of the biggest developments of the last week has been the launch of the new Warm Home Scheme. In simple terms, it's about making homes cheaper to run and more energy efficient, supporting upgrades like insulation, heating improvements, and other energy efficiency matters. But why does this matter for mortgages? Because energy efficiency and running costs are increasingly part of the long-term affordability calculation. So for homeowners, that could be improving your property rather than moving, funding upgrades as part of a remortgage, or even prioritising an energy-efficient home when you're buying. It's a shift towards looking at the whole cost of ownership, not just the interest rate. So my key takeaways this week: mortgage rates are competitive, not chaotic. Affordability is improving. That's backed up by the housing data. Energy efficiency is no longer an afterthought. And if your deal ends in the next 3 to 6 months, then planning early is going to give you that confidence and options. If you want to talk through your options, whether it's buying, remortgaging, or funding home improvements, get in touch. I'm Patrick Wakeman, your local East Midlands mortgage and protection advisor, serving clients up and down the UK. Speak to you soon. Bye-bye.